Okay, so we're gonna head into 9:30 here soon. It's 8:52. I'm gonna go walk my dogs. I'm gonna do a couple minutes of pre-market analysis for you guys to just figure out where we could be going today. So first off, we're gonna go to a single screen. Then we're gonna go to MES instead of ES because my ES is already drawn out. I don't want you to see what we're doing. And we're just going to go to the 4-hour time frame. Okay. As you can see on the 4-hour time frame, we are range bound between 55.78. Don't worry about the wick out. We're range bound between 55.78 and 56.70 right now. So that's the range that we're in. So let's go ahead and put a white line right there so that we can see the history of it. We'll put a white line right underneath this wick here. We'll go 55.74. And then we got a white line at this blue line right here. And now as we go to the left, we can start to see the zones on the 4 hours, right? You start to see this wick here. So now we need to see what all is below this. And as you can see, the white line is touching the direct break of these candles right here. So then as I go through, I can see that it bounced right there, bounced right there. So this is an area of resistance. Indeed, it is indeed an area of resistance, right? Now we need to find our area of support. So we're going to come over here. And as you can see, all of these things fall below it. And when we broke above, it became an area of support, and it's been holding ever since. So we're within the middle of the area of resistance and support. We can go either way, right? So now let's just highlight two of these areas. All right, these two areas right here. So we are within the break, and the bottom is down here where we could fall down to. So where we're struggling to get through right now is we're sitting just above this candle here. So I'd say that my current zone for the day ends at about 156.17. Now if we break below that, we'll be heading for my blue line right here, which is 56.04. I always leave my main zones with these blue lines, but there's partial zones that go down to it. The next area of concern would be right here at 56.11. That's if the market trends down. We could immediately bounce back up when the market opens up, but right now we are trending down. And the only reason we're trending down is because yesterday was the holiday and we ran up to a new high for the week and for the month. As you can see, the previous high was here, then we made it there, and now we're even higher. We reached my blue line. My blue line used to be set on this candle over here, and now it's all the way over here. I just keep moving them to the right as time goes on. Now let's go down to the 1 hour time frame really quickly, and as you can see, we're basically just about the 1 hour 200 EMA. So I would put a line right here to let me know that, hey, if we come down to 56.21, that may be an area of interest. But the real area of interest that I have is down here at 56.04 that I want to hit, but I don't think we get all the way down there. So the first level would just be this drawback to this volume imbalance. Let me zoom in on that to make sure that you guys see that very good. Okay, so you got a volume imbalance here. You have a wick right above the volume imbalance. I want to mark that as well as a first level of interest. If we fall down to 24, that's an immediate go to the upside for me, just for the stance of a pullback. Obviously, we can come down to this area here, but from the stance of a pullback, I'm looking at 24 as an area that we can pop up about $10. Then from there, if we decide to push down even further, because honestly, we've been consolidating this whole time, so it's anyone's game once this market opens up because we've been consolidating. But if we come down and touch this 56.22, you better believe I'm taking a play to the upside. Now you don't have to follow my play. If it breaks through, obviously I won't be taking that play, but if it touches and it goes, I'll be taking that play to the upside. So now we'll go over to the 15-minute time frame, and you can see where the 15 minutes 200 EMA is. It's pretty much cutting it right down the middle. So this is the EMA that I'm looking for to divide the market for me this morning. Going up to it, coming down from it, going up above it, going up to the next one. Then we're going to go over just really quickly to the 5 minutes 200 EMA, and as you can see, it's a little bit higher than the 15 minutes. So this will be my first area of interest as to where it's reaching up to if we start trending up. So if we bounce down here and we start trending towards the upside, I'll be looking for us to hit this 5 minute 200 EMA. Right there at the break of these candles is 55. Right here is 46. I think we can easily make a $16 push to the upside. And last but not least, where I'm going to be taking my trades from. As you can see, our first level of resistance is where we're currently struggling to get above, and the 200 is acting as resistance right now, not necessarily a supply and demand. So with the 200 acting as resistance, let's go ahead and refresh this so you can see what it really looks like. We just keep bouncing off of it, going back down here, bouncing off of it, going back down here. Once we break it, we'll be looking to get to the 15 minute and the 5 minute further up here. But for right now, we're being forced to the downside by the strong level of resistance right here, or strong supply zone right here. But that's it for now, guys. We are trending down, so as always, we could break to the downside for a little bit. RSI does not matter when the market opens. It can go all the way down to like 6 for all they care. But right now, follow the trend. Trust the trend. If the trend says we're going down, I'd be looking for trends to the downside until we break these trends to the downside and start heading back up. 3 minutes until 9 o'clock. We are pushing down aggressively. So keep an eye on that for 9:30, guys. You guys have a great day. Happy hunting out there. I'm your boy Sebastian, and I'm out.